Hello everyone, welcome to a new video on one of our portfolios, Balance 25. Balance 25 is a portfolio of sector leaders and is a majority large cap stock portfolio. Now, the broader market has been volatile in India and for the global markets too. But interesting, Indian markets have outperformed their global peers. Now, this is majorly because of how the global economic landscape has been. In the US continues to battle with its high inflation. The Eurozone continues to battle with the high energy prices, and the Chinese and the Southeast Asian countries are battling lower growth and earnings projections. Now, this has led to a lot of outperformance for the Indian indices. And in such a case, the FIIs or the foreign institutional investors, for them, India is an interesting destination because it is more or less, I would say, it is more or less safe from all these risks. The inflation is fairly in control in India. The rates are on the verge of being cut out for the in the second half of 2024, hopefully. And also the earnings projection for the Indian stocks or the companies as a whole looks pretty healthy. Now moving on, within India, if we look at the market cap wise performance, the small caps have pretty much outperformed the large caps by a huge margin. Now, what has led to this outperformance is how the retail participation has grown in India. If you go back in time and see during the 2021 and 22 period, the small caps saw an uptick in demand. Now, what this led to is simply put, there was a lot of performance that was seen in the markets. Now, when the new retail investors came into the markets, for them, the small cap space looked really attractive because of the kind of returns it offered. Now, this led to a lot of small cap SIPs to begin. And when the SIPs began, a lot of these small cap funds went out and bought in the market. Now, what this did is it essentially led to a feedback loop wherein a lot of these DIIs or the domestic institutional investors or the mutual funds for you and me, a lot of these mutual funds went out and bought into the small cap stocks. Now, this essentially further increased the demand, further the prices rose for these companies. And essentially, that is essentially what has played out even in 2023. If you roll back the clock to March of 2023, in that zone, the small caps were really attractive from a valuation standpoint. But as the DII started picking up these small caps, the rally again began. So essentially, that this is what has happened for the past uh, about 2 or 3 years now. In such a case or such a period, the large caps were more or less left out. Since there was so much rally behind the small cap, the people essentially discounted and forgot about the large cap companies, which still demand, which still command a huge market share. And apparently, this is something the market is missing out on. And moving forward, if you look at the small cap index has more junk stocks. So, what essentially are junk stocks? So the small cap 250 index, about 30% of the stocks in the index are either loss making, either have low ROEs. A high ROE essentially means good quality company. Now, when you compare it with the large and mid cap index, now if you go to if you look at the large and mid cap index, it's about 18% of the index. But if you look at the large cap index alone, it would be less than 10% of the stocks, right? So that is what the difference is between this large and mid cap and the small cap index, and how there's a higher concentration of junk stocks. So since there was a lot of demand and there was a lot of SIP flow into these small cap schemes, the funds started increasing their investment horizons or the investment coverage, wherein they went beyond the top 10 percentile of good quality stocks into the lower percentiles. So essentially, this has what fed on to the rally. Now, if you look at on a valuation standpoint in the current market, the large caps look really attractive. So what we have here is a long-term chart of P multiples of all the three indices, the Nifty Small Cap 50, Nifty Mid Cap 50, and the Nifty 50. Now, if you see the small cap has indeed rallied, the green line, but if you look at the black line, which is the Nifty 50, it is still trading near its long-term averages. Matter of fact, Nifty is trading just above its long-term median average of the past 10 or 10 years. So this essentially makes the large caps much more attractive for the new investors who are coming into the markets now, or the existing ones who are looking to get out of small and mid caps. Now, in order to give you a brief and more information on the portfolio itself, our invest pack or our small cap itself, I have with me Mr. Shubham Jha from the investment team, who would brief you on the portfolio and how we go about stock picking within the portfolio. Over to you, Shubham.
Yeah, thank you for this amazing explanation, Naman. Yeah, so let's talk about how Balance 25 has been doing. Even though large caps had a bit of tough time last year, Balance 25 held its ground and actually did better than the specific index. Now, looking ahead, we are sticking to what worked for us, focusing on where we put our money and picking companies that we think that earnings could double in next 2 to 3 years. Now, people ask me like, what type of sectors do you analyze? We have studied multiple sectors. We picked out of the top companies with an excellent moat and the businesses models. The portfolio of Balance 25 is relatively low risk compared to our value multi cap. Okay, and it has a low churn ratio, what enables us to have the quality of the business. So basically Balance 25 is an buy and hold strategy in the nutshell. Now we will discuss, like, I would like to discuss some of our few picks, and I'll give you a full disclaimer that we still hold the company. The company name is BSE. So BSE was the only listed player when we initially saw. We played the macro industry. Market was increasing and the retail participation was increasing day by day. If you will see, last year around 12 to 13 crores, total around 12 to 13 crores new demat account were opened. So basically now from the other perspective, the only thesis which नहीं इसको कट करते हैं 12 to 13 crores total डीमैट अकाउंट है ना अब तक ना
हम्म,
तो
थोड़ा
यार ये
10+ करोड़ बोल देना.
रुक जा मुझे पावर में नस्ट गया है
और 12 करोड़ above, ताकि ऊपर ही रहे.
ओके
Go from BSE again. ठीक है? 3, 2,
ओके
1.
the company is BSE. BSE is the only listed player. When we initially saw, we played the macro industry. The market participation was increasing, retail participation was increasing, and if you will see, total demat account in India is around more than 10 crores. Now, the other aspects of this thesis was Indian exchanges were strong, benefiting the financializations and also saving digitalizations of capital market. Now the another company which which we bought in a Balance 25 is Angel One. The idea behind this stock was similar, one of the top listed player in the broking space. Now when we initially did the research, we find out that Angel One has lot of inactive accounts. Then we met with the management and we're told that this account soon will be maturing. Now what happens when the mature accounts turnover is turn when the mature account turnover is क्या है ये? Leave. Okay.
The account, sure, the turnover increases on these accounts.
Right.
Start from Angel One again. 3, 2, 1.
The another company which we hold in our portfolio is Angel One. Angel One is the only listed company. cut कर दो वापस रुक जाओ. Now the second company which we hold in Balance 25 is Angel One. Now the idea behind Angel One was similar one. It was one of the top listed player in the broking space. Now when we initially did the research, we find out that the Angel One has a lot of inactive accounts, and then we met with the management and we're told that this account soon will be maturing. Now, what happens with the mature account? The turnover increases, and when the account is inactive, when the account is inactive, it's virtually zero. But when the account matures, Angel One will have a sales guy reach out to this account and get them back to active. So basically, it will benefit to the company, and you will see a huge, an uptick in the margins. Recently, we saw that the growth momentum in FNO segment also increases, and the same was reflected in the bottom line. Now, if I have to conclude about our balance 25, we believe in the companies that are set to grow big in next few years. Currently in balance 25, we have around 51% of allocation in large caps, and we are planning to shift it to 55 to 60% in coming quarters. And that's a very good news for us, because we are very positive about big companies making a strong comeback soon. This means that if the big companies make a strong comeback, our small case is likely to do even much better than large caps. So in simple terms, we are keeping it real, picking the right companies, and we are pretty excited about what future holds for balance 25.
Hey, Shubham, that was a great, uh, small brief about the portfolio itself. So that is essentially how the large cap portfolio that we have Balance 25 is. And it's a lovely time to be in the markets. Uh, it's been really good. The markets are making the new highs and the earnings continue to be excellent. In such a case, we recommend a more diversified approach to the market. Given how the market valuations are currently, we are overweight on large caps. And in such a case, we see small cases or invest packs like Balance 25 performing really well in the coming quarters. And that was a brief on the Balance 25 portfolio. So thank you. Thank you for watching the video. And we look forward to partnering with you, serving you guys. And if you do like the video, do like, share, and subscribe. Thank you.
थैंक यू. पॉज करूँ ना उसको, या रिकॉर्ड क्या करूँ?
Stop.